Hello and welcome to Crypto Weeklies. Today in this video, we discuss the one chart that I use to look at the entire market cycle, especially with respect to the lens of Bitcoin, and decide where the market cycle is, what's the inherent risk level. This is the not financial advice. This is the chart of Bitcoin's price on a logarithmic scale, and using the polynomial regression based fair value identify the risk in the market with respect to the fair value and identify if Bitcoin is overvalued, undervalued, what are the risk levels, what could potentially happen. So this is just one chart trying to summarize all of it. Again, no single chart can do 100% justice to every single underlying current in the market, but major trends can be interpreted by using this kind of polynomial regression based analysis. This is with 2 degrees of freedom. That means it's a non-linear model, but more like a quadratic interpretation of the regression function. So the fair value of Bitcoin is, again, it's an assumed fair value based on the price action. Bitcoin does not have an inherent fair value or undervalue or overvalue. It depends on historical analysis at a daily close level of closes for the last 10 to 11 years 10 to 12 years since 2014 September till today, now in 2026. How those closes kind of interact with each other to find a regression function which fits to the price action in such a way that it equally cuts the overvaluation and undervaluation zones. This line over here, the gray line over here, tries to do that exactly. And based on the proportional and time adjusted difference between the price and the regression based lines, this color codes are assigned between the levels of 0, that means the lowest risk, and between 0.9 and 1, that means the highest risk. Whenever the price is below the regression based fair value, like it is right now, again the fair value for Bitcoin is at around 78k. The price of Bitcoin over here, again this is Bitcoin dominance, this is price of Bitcoin at around 66k. So there is almost an air gap of $12,000 between the price and the fair value. But what you can see that historically speaking, again whenever the price is below the fair value, it typically coincides with those phases where either Bitcoin is an unknown entity, like it was in the early half of 2015 to 2017 cycle, or if it since that 2017 major blow off top for Bitcoin. Typically these undervaluation phases coincide with either the bear market or any lackluster performance following like a major counter trend rally like Bitcoin had in 2019. So typically, whenever the price falls below the regression based fair value, you can even argue that similar thing happened between that third quarter of 2024, between July to about October 2024. So now, since we are below the price of Bitcoin is now below the fair value since that bear market year kind of began. Again, Jan 2026, the risk levels were at 0.56. That's because the price was above the regression based fair value. Since that first drop in the month of February, again as February began, took the price well below the regression based fair value. At one point the daily close was at around 62k, which was, again, the air gap was between 12 to 13,000, quite similar to today. The price of Bitcoin, again, has not shown a major phase where the price has to go down so much that the regression function starts to have a downward slope. Essentially, the price, even though can go to the extreme overvaluation or extreme undervaluation, there have been a series of higher highs and higher lows for Bitcoin at a macro level. That means the low from one bear market to the other bear market is at least, again, if not one exponential higher, at least 3 to 5x of the previous lows. So for example, 2018 low was at around, roughly speaking, $3,000. And 2022 low 4 years later was $15,000. So that means almost a 5x from there. 2014 2015 low was at around $178, and then the next time it was more than 10x in 2018. So that's where the price of Bitcoin kind of stabilizes in terms of the higher low structure and also the higher highs. From 2017 the peak was roughly 20k, 2021 roughly 60k, 2025 roughly 120k. So from here, from 2017 grew 3x, from 2021 grew 2x. So this is, again, one could argue that there is a diminished volatility to the upside. That means the returns from cycle to cycle go low, from 3x in 2021 from 2017, 2x in 2025 from 2021. So the bottom again over here, from that 15,000 roughly speaking 2022 bottom, one could argue if it's a 2x higher, then the price of Bitcoin at the bottom could be 30k. If it's a 3x higher, then the price of Bitcoin could be around 45k at the bottom. So that's the whole argument. The way to interpret this is again using the distance between the price and the fair value as an example. Right now, if we take a similar color code, the risk level between 0.3 and 0.4, just ignore other risk levels for now. You can toggle. By the way, this chart is available for all under Crypto Weekly's website. The link is on the bottom of your screen. I can show you where this chart is available from the home page. So looking at the prior bear market, this drop in 2022 came much later into the year, where the price fell below the fair value in let's say late April, early May 2022. That was again second week of May 2022, whereas this time around this zone in 2026 came much earlier in February itself. So almost 3 months prior, if you look at from 2022 to 2026 transition to this risk level, it has come 3 months prior than in 2022. So from here in 2022, what typically happened is one risk level below, price action went to that one risk level below where the risk was between 0.2 and 0.3. Essentially, one could argue that that's when the price came really close to the bottom of around $20,000 to $22,000. Typical accumulation for Bitcoin in the bear market, personally speaking, again, there are no guarantees that the price has to go to these risk levels, especially the ones, especially the bottom risk level over here between 0 and 0.1. This plum colored zone, again in 2018 cycle, this level Bitcoin did not go. That level again Bitcoin did visit before the 2021 bull run, that was in March 2020. Although the price in 2018 was lower than in 2020, again there were from the regression based fair value perspective, the distance was higher in 2020 over here than in 2018. So that counts for a lot. So, but there are no guarantees that again these kind of drops have to happen every single cycle. Last time they occurred in this drop occurred in October, November 2022 when there was a FTX collapse related news. This may happen, this may not happen in 2026, but what needs to happen again, the logical sense is that at least the price of Bitcoin goes to this blue territory where the regression risk is between 0.1 and 0.2. That's when price went sub 20,000 in June 2022. So this risk level has not kind of materialized in 2026 yet. We are 2 risk levels away right now. We are in this 0.3 to 0.4 risk level. The optimistic scenario says that again, if the regression risk were to only go to between 0.2 and 0.3, then DCA could again at that point dollar cost average could again potentially make some sense. Again, not financial advice. At least the bear market accumulation for Bitcoin, it makes more sense when the regression risk is at least less than 30%, or between that 20% and 30%, that is between 0.2 and 0.3 risk. If that were to happen, back then the distance between the price, in terms of proportion, the raw values are exactly the same, 13,000 difference, but a 13,000 difference in a 36 or $35,000 fair value accounts for about more than 1/3 difference. That means the deviation is more than 33%, but over here, as the fair value is 78K, 1/3 of that would be, roughly speaking, $25,000 to $26,000 lower than the fair value. So deducting 25,000 or 26,000 from that 75,000, roughly speaking, that gets the price of Bitcoin close to 50K. When and if that scenario presents itself, that's when the regression risk would be less than, or in between the 20% and 30% risk level, triggering the cycle accumulation phase. The bottom for Bitcoin this cycle could be in this blue zone, where the first iteration again came in 2022 June, where the price at that point was 20K, the fair value was 35K. And in terms of the percentage, the difference was again $15,000 difference over $35,000. So roughly speaking, 40 to 50K difference. 40 to 50% difference between the price and the fair value. A 40% difference on, roughly speaking, let's say that happens when the fair value goes to $80,000. 40% of 80 is 32K. That's 32K deducted from $80,000. That gets the price close at the bottom at around slightly less than $48,000. If you say that the fair value does not go to 80K by then the price at the bottom could be close to $45,000 to $47,000. At that risk, where the color codes start becoming in this blue color, this range is between 0.1 and 0.2 risk. Again, if we were to go to that extrapolation right now, this is also available on website. Again, this regression line can be forecasted into the future to get when the price or the fair value goes to 80K. That would be at least around June of 2026. And if at that point, again, this is the overvaluation, this time price action did not go to that 2 standard deviation overvaluation, and undervaluation is, again, price has not visited that undervaluation levels. It would take a severe macro recession to get to those level, which is currently at around sub $20K. Or that's the worst case scenario for Bitcoin. Again, price below 20K in this cycle, again, is very unlikely. So the likely projections for Bitcoin, now that price has eventually gone to that $61,000 level in February, the next stop for a major cool off in the risk level is at around 50K, which is in line with that 0.2 to 0.3 risk level, and the one after that is at around 40K level. That's the second bottoming pattern using projection techniques. Nonetheless, again, using the regression based risk approach based bottoms says that, again, right now, as the risk levels are between 0.3 and 0.4, again, they're not the worst time to DCA, again, as the price is below the fair value of Bitcoin. But again, they are not the best time either in the bear market years, where the price action has this pattern of holding a level like it did in 2022 from January 2022 up until April, like we did from December 2025 till February 2026, and then eventually succumbing to a drop, and following that drop, spending some levels, a handful number of weeks going to that counter trend rally, and then eventually having one more major drop. Where the bottom is usually found is when the price of Bitcoin goes to that risk levels between 0.1 and 0.2, at least to those risk levels, and then eventually there is one rally where the lows are established, and the counter trend rally resolves in the valuation which is higher than the um, previous rallies level. So for example, in 2023 January, the rally the highs of that rally were at around 23k, which was higher than the November 2022 counter trend rally. So that's a bottoming pattern for Bitcoin. Again, no single model can predict what the price has to be at the bottom, but directionally speaking, these risk levels help identify what risk levels could that potentially be in 2026. Personally speaking, when and if the risk level falls in this light blue pattern where the risk levels are between 0.2 and 0.3, that's when DCA makes some sort of sense. Again, nobody knows if the risk levels have to go to the uh, purple color or the blue color, even in that diminished volatility fashion for Bitcoin. And again, there are examples that, for example, the opposite side of the spectrum. So for example, in 2025 the risk levels did not even go to 0.7, they resolved at around 0.6 level. So if the top is at 0.6 to 0.7, whereas again from cycle to cycle the 0.9 point, so for example the 100% risk level did not, so for example in 2021 the price did not go to risk levels between 0.9 and 0.1. So 0.9 and 100 price action did not go and spend much time over there, whereas in 2021 the price did go to between 0.8 and 0.9 risk level. This time around the top occurred at around 0.6 to 0.7 risk level with respect to the regression function. That means there is a chance that if the top occurred at a lower risk band, the bottom could also occur at a lower risk band as well, somewhere between 0.2 and 0.3. That's the optimistic approach. Or if not, the next logical sequence would be between 0.1 and 0.2 risk level. So both of these scenarios are theoretically possible. And again, when the price is significantly lower than the fair value, that estimation of the fair value, at those levels, again being greedy at extreme fear level in the market is not the worst time to be greedy. Again, not financial advice. And with that I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.